Hey, Kevin here, top 100 financial advisor, two-time author, one-time bestseller, and we are here to talk about the stock market. Investors are pouring money into weed stocks right now, Tilray being one of the front runners. So I want to tell you what's going on, why this is happening, how to play this trade if you want to, and really how to protect your money if that's what you want to do. So first, look, I be telling y'all, this is why I tell y'all to share the videos. This is why I tell you to follow me on Public. You can go to public.com/building bread. And here's why. On the 28th of January, I talked about Tilray and what happened with it in 2018 and what looks like what's going to happen right now. So I want to explain what's going on. Hit the share button right now because just like GameStop and AMC were very popular, just a week or two ago, and people made a lot of money. People also lost a lot of money. Here's another one. It's actually a few stocks, I would say probably 3 or 4 that are on their radar that's shot up more than 50% today. So I want to explain very early on what's going on, if you do it, how to protect yourself. Now, I will say this, disclaimer, I do not recommend this for most people. If you are a beginner and this is your first time investing, this probably is not the place for you. These stocks are probably not the place for you. This is for our high risk people or higher risk people. People have done this for a little bit, and is with throwaway money, not my long-term investments. I need this money down the line. This is throwaway money. I got $300. I wasn't really caring about it. All right. So I'm gonna tell you what's going on. I'm gonna tell you how to protect yourself and how to make money if you are looking to do it. But I'm also telling you it is for a certain segment of people. Okay. It is not for everybody. All right. So all the companies we're going to talk about today are weed stocks, cannabis companies. And as we talked about way back in November, when we talked about the election, we said that electric vehicles were a place where people were going to talk about, and we knew that those stocks were going to rise. And I also said cannabis companies. Now, personally, I'm not a huge person in the cannabis space. My go-to person is Courtney, the Ivy Investor. She was in the 2021 workbook. Excuse me, she's been talking about cannabis for years, and she is an attorney, so she knows the ins and outs of the law. I'm just a stock guy. I'm just a financial advisor. I can tell you from the outside in what's a good company, what's not, and how to make money and how not to. But I'm not a cannabis expert. So when it comes to law and what is likely to happen, whether it's going to get legalized or not, you go to her for that. I'll make sure to put her info somewhere in the comments. All right, but aside from that, I'll tell you what's going on. And I should show you a few graphs here in a second. So the first one is Tilray. Again, all of these are marijuana companies. Some are in medical, some are in recreational. They do different things, but this is why people are jumping into it. If you check out Wall Street Bets as well as CNBC, the same people that pumped AMC and the same people that pumped GameStop, they're moving now. The exact same people are moving here. If you check some of the charts, you'll see that it's relatively recent. So I'm just coming out here now. I'm also going to tell you this. We don't know, and don't ask me what the top is going to be. Is Tilray going to go to 100? I don't know. Is it going to go to 200, 300? I don't know. No one knows where it's going to go, which is why I'm going to show you a protection measure here in a few seconds. But here's the thing. And I'll read this from 2018, or about what happened to Tilray in 2018. Wrote this on January 28th on Public. Follow your boy on Public. All right, so back in 2018, there was a little company called Tilray. From August 2018, the stock was $20 a share. Then because of hype around marijuana legalization, which is happening right now, the stock popped and reached more than $200 a share by September. And that was a 10x gain in 45 days. Then reality hit, it fell down, it went down to 70 and then went down back to below $20 a share. Right now, Tilray popped today 50%, and now it's above 60. Let me go ahead and share the screen and show you what I am looking at real quick. And here we go. There are 3 companies total. I'll get to that one in a second. So here's Tilray. As you can see, Tilray up $21, which is about 50.9% at $63.91. I mean, just absolutely took off. Not too long ago, on the 15th of January, right before I posted that, they were still under $20. They were at $200 back in 2018. So this is a big risk, a very big risk, because 63 might be the top. Just like it was for GameStop. GameStop's top was like 374 or something like that. It ain't been back since, right? GameStop is I mean, it was already trash, but people were able to profit from it. So again, this exact same thing with Tilray happened 3 years ago, and I'll show you here. We're going to hit the 5-year chart and look at that. Tilray at 148, almost $150 a share back in 2018. This is October. This doesn't even go back to August, like I had mentioned, and it's fallen off the map ever since, with the exception of really today. So could it go back to 150? Possible. I have no idea, but I'm telling you, it is going to be a risk. There is a way, if you're looking to get into it, there may be a way to get in and protect yourself. So I'll show you that in a second. Another company that is really popping off is Sundial. They are Sundial growers, also in the marijuana space. They were up 78% today. Now, this is a penny stock, so I'm really not a fan of this one at all. So this is not even one that I would play with. Let me take this off real quick so I can look y'all in the face. So as you know, everything here is for educational purposes only. Disclaimer, y'all know that. So you take it, you go educate yourself and make a decision on your own. You do what you want to do. But if I were looking at it, first off, I don't claim any of these as a long-term investment. It's not a space that I really follow, and it's still very, very volatile and unknown. Should marijuana be legalized on a federal level, that changed the game. I'll come back and reevaluate at that point in time. But of the two, if I'm looking at Sundown, looking at Tilray, my mind would go to Tilray because at least they have been consistent, even though they haven't been great. They've been consistently over that $5 mark, which we had just talked about yesterday. For me, if it's under $5, I'm not looking at it. So Sundown, no. Could you still make money? Yes, but I'm telling you, it's a much bigger risk. So be very, 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 very careful there. The last company I think is Alpheria, if I'm saying it correctly. I'm gonna share the screen again so you guys can see it. I could be pronouncing it completely wrong. No, maybe, yeah, Alpheria, perhaps. So that one is popped. You can see here it was under $5 a share for the most part. It really took off. What is this? Early January, and then really took off today, and it's up about 10% to $26. So all three of these, all the marijuana space, all do in a sense they do deserve to go up. So that's the difference. And from what I tell, I can't tell if it's a short squeeze, but we do know that the same people are really pushing these stocks. They're jumping into it. That's why they are up today. And these companies, they have a little bit more logic behind it. AMC really didn't deserve to go up. They were going bankrupt. GameStop didn't really deserve to go up. I mean, they were struggling they're not in the right industry, but marijuana has a little more hope. You have, at least for the next 2 years, you've got people in power who are willing to at least have that discussion. So it makes sense in theory that these would go up. So I get it. Now, for them to go up so quickly, so soon, or to go up so high so soon, that's the concern for me. Now, if you told me that Tilray was going to go 50% for the entire year, okay, I could get on with that. That would make sense. But to do it in a day, I can tell you right now, very similar to 2018, because I saw it happen in 2018. This is going to be something that's relatively quick. It'll go up in a few weeks, just exactly like I told you with GameStop, and exactly like I told you with AMC. Eventually it will fall, and it will not be long. So if you are getting into it, how do you get into this and how do you protect yourself? That is the number one most important thing. Now, I will be forthright, and because I know how to use these techniques, I put like $300 into Tilray, again, to be transparent, and I use the exact same technique. So either way it goes, your boy is going to make money. I'm going to be all right. But this is for advanced investors. If you are new, if this is your first stock, I wouldn't be excited about you doing this because you might not know what you're doing, and I'll show you why. So for more experienced people, stick around. I'm going to show you this. For those who are new, take notes. This is a place that you want to get to at some point in your investing journey. If you're not there, it's okay. There will be other opportunities. We just saw some just last month. There will be some throughout the year and throughout your investing time. So stick around, take notes. I'm going to show you how to do this real quick. All right, so let's go to the whiteboard here, and it doesn't matter what stock it is, but for this example, I'll just show you what I did for Tilray, because I also practice what I preach, right? All right, so I got in, and this is say TLRY. All right, so we're just saying for this one, it's Tilray, and the stock is going up, right? So for me, I got in Actually, let me just draw it this way. So I got in at about $53 a share. That's when I bought. Okay. And right now it is at like 63. So what I've done, and let's say, let me make this line a little bit more accurate. Let's say it's at $63. All right, and y'all know my art and my handwriting is not the best in the world, but we are going to work with it. All right, so what I've done, the first thing I've done is I've added a sell stop order, or I'm sorry, a stop loss. So stop loss, not loose, loss, and that is at $55. Okay, and then I have a sell limit. Sell limit at, I think this one's at $65. So here's how it works. So I've already bought in, right? I got in at 53. It's already above the 55. So this means that I have no idea what's going to happen tomorrow. But if the stock starts to fall for any reason, I'm going to sell out automatically. It's already going to cash me out at $55. So I'm going to make just $2 per share for every share that I have. I don't have that many. Whatever it is, 300 divided by whatever this is. So I've already locked in my profit. It already went up. I put my sell stop at 55. I'm good. Worst case scenario, I'm going to make $2 for every share that I have. So that's okay, right? But if tomorrow it just does something ridiculous and things go up, then it will automatically sell somewhere around that 65. And that means that I'm already locking in profit. What is that? $12. So $12 for every share that I have from 53. We're taking 53 minus the 65. So that's how I have it set up. Now, the good thing about this is I'm relatively protected. I have my stop loss, which is going to limit me. If anything happens, if it drops, I still have locked in some part of my profit. If it gets to my target, which is 65 at this point, I don't know if it's going to get to 65 or not. When I got in at 53, I didn't know if it was going to be get to that $65 mark or not. I have no idea. You have to really just wait and see. But basically, I don't have to worry about, well, what if it gets to 100? What if it gets to 200? I can worry about that when it gets there, but I will guarantee to a degree, I've locked in some part of my profits. I'm either, worst case scenario, I'm going to make myself $2 a share. Best case scenario, I'm going to lock in, what is that, like $12 a share. So I'm going to be okay in either sense. If it keeps going to 200, fine, let it go. Maybe I'll get back in at a different point, but this is a safer way for me to get in this. This is called, some people call it a bracket, an OCO bracket. One order cancels the other. But basically, I have a stop loss here. I'm going to be good if it drops. Fine, I could let it drop. I don't care. I got my stop loss here, which is going to help me to protect some degree if it falls. And then if it takes off, great. I've already locked in a part of my profits. Because what I don't want to do, and what some people have done, is they just let it run and it makes a lot of money and it comes back down and they lose everything or lose a big part of it. So what I've done, I've set up that bracket, so I'm all right. I'm gonna be okay. It's already locked in. I don't need to do anything. It's automatic and it's already set. And I did this through TD Ameritrade. You can't do it through Public yet. You should be able to do it through Fidelity. Again, a lot of those legacy brokerage firms, you should be able to do it there. You might be able to do it at Robinhood if you're still at Robinhood. But in most places, most of the more sophisticated apps, you should be able to pull something off like this. So it is a it is a stop loss order combined with a sell limit order. You set these prices. You can really set them wherever you want to set them. I could, in theory, if I wanted to, depending on how high it goes, I could keep moving this stop loss up. And let's say it goes to 80, I can keep moving these brackets up, so that I keep locking in at a minimum a higher gain. So I could do that if I wanted to. But that's just one way to profit for some of these more risky stocks, some of these short-term trades, and this is a short-term thing for me. I ain't putting in my long-term portfolio. I don't trust them like that. But that's one way to kind of lock in those gains from something that you know is risky and something that you know is not going to be here for a long time, at least from what we know right now. So for me, again, I have that bracket. I've got my stop loss. So I'm gonna be okay if it drops tomorrow. I don't know what's gonna happen tomorrow. If it shoots up, I got my profit and I ran. Will I have made the most money in the world? No. And that's fine. I don't have to. It doesn't have to be a loud ticket. I don't need to be greedy and start to chase stuff because everybody else is out there doing it. So that's one way that you can look at it. The other way is just to avoid it altogether. So you always want to be very, very aware of that. Now, the other reason why I'm trying this on Tilray and why I did not do it on GameStop is because most of us were pretty late on GameStop, but also, again, I'm being super consistent here. I didn't feel that GameStop deserved to go up. It was a company that was already going bankrupt. Tilray makes sense. We talked about Tilray when I talked about EV stocks and cannabis companies months ago in December. I'm sorry, in November. So we talked about that. It makes sense. Now people are rushing towards it, but it does make sense. It just does make sense why it's going up so quickly. So let it go up. You want to be a flash in the pan? Fine. I'm gonna get my little profit capture and I'm gonna head out. I'm already set. So it's something that you could consider doing if you've been doing this for a while. If you haven't, again, be patient. If you are a new investor, stick with your index funds, stick with your quality companies, and eventually work your way into what we were just talking about, which is trading. All right. So you want to have those in two separate buckets. My trading stuff is at TD. My long-term stuff is at Fidelity, and my medium-term stuff is at Public. So I have a place for each of these things. You don't have to have it all spread out like I do. But I have a place for all of that stuff, and I have a reason for it. That is, this Tilray stuff is throwaway money. It's already locked in. I'm already make a profit, even though it's small in the worst case scenario. So again, just being super transparent with you guys. If you're new, sit this one out. Continue building your long-term stuff. Come Friday, you know where I'm going. You know I'm putting my money in Apple and all the stuff that you see on Public, and I'm gonna keep it pushing. But for this in my trading account, I show you how I just set up my own trade for a short-term but safe profit. So I'm for safety. I know where I'm gonna get out of this. Right? Worst case scenario, I know I'm gonna get $2 a share profit. I'm good with that. Best case scenario, I'm gonna get 12. I know what I'm doing, right? I'm good. If you set that up, you'll be in a very, very similar position. And if it takes off, fine, right? But we know what we got. All right, so that is it for me. I know it's a little bit longer, at least it felt longer for me. Make sure you share this video. I will talk to you guys tomorrow. I'll also follow the story as it continues to go along. Again, I'm not confident this is going to be a long-term thing. I don't think y'all can put as many rockets as you want. I don't care if it's going to the moon. This ain't something that's gonna last. It almost never does this. We just saw this not too long ago. We just saw this with Tilray in 2018. It ain't been that long. So you know what's gonna happen. So you either leave it alone, or if you're a seasoned trader, you can do some similar techniques as to what I did. And other than that, just let it go. All right. So that is it for me. I'll talk to you guys later. Bye.